CRWV is down around 9%. This is Friday, the 27th of February 2026 pre-market session. The company delivered the kind of earnings report that splits a room in half. On one hand, the company posted explosive top-line growth and an eye-popping $66.8 billion revenue backlog. On the other hand, it reported widening losses, an EPS miss, and rising interest expenses tied to its aggressive expansion strategy. The result, one of the most polarizing AI infrastructure debates in the market right now. So the headline numbers we have for Q4 revenue $1.57 billion. Financial year 2025 revenue is $5.13 billion. Adjusted operating income $88 million below expectations. EPS negative $0.89, missed estimates. Full year net loss is $1.17 billion, widening significantly. Year end backlog $66.8 billion. The revenue growth is undeniable. This is hyperscale expansion speed, but the profitability story is clearly lagging behind. The bull case, demand is real and massive. Bulls are focused almost entirely on two things: the $66.8 billion backlog. That backlog figure is enormous relative to current revenue. It represents multi year contracted demand, largely tied to AI hyperscalers racing to secure compute capacity. In a market where GPU access and power are the real bottlenecks, contracted backlog equals visibility, and visibility equals confidence. And according to Jensen Huang, that is ultimately turns out to be tokens, and tokens equals money. So the $8.5 billion meta-backed loan, that's another point that the bulls are making. The newly disclosed Meta supported financing facility is being interpreted as validation. Bulls argue that major hyperscalers would not backstop infrastructure funding unless they were confident in long term demand and CoreWeave's ability to deliver. To them, this is classic infrastructure scaling pain: front loaded capex, temporary margin compression, long term revenue lock in. They see widening losses as a byproduct of expansion, not a structural flaw. The bear case, growth at any cost. Bears see something very different. Yes, revenue is growing, but so are net losses, interest expenses, debt exposure, and cash burn. The full year net loss of $1.17 billion raises questions about how long the company can expand at this pace without further dilution or leverage increases. The EPS miss and weaker than expected adjusted operating income suggest operational pressure beneath the revenue surge. In capital intensive businesses, timing mismatches between revenue recognition and infrastructure spending can quickly stress balance sheets. For skeptics, this is one core risk. AI demand is strong, but execution risk is even stronger. The real battleground, capital structure. CoreWeave isn't a software company at 88% margins. It's a capital heavy infrastructure builder in one of the most power constrained industries in the world. Key investor questions now include: how sustainable is the debt load? What are the terms of the $8.5 billion Meta backed facility? How quickly does backlog convert into cash flow? When does operating leverage meaningfully show up? This is where the earnings becomes crucial. Investors aren't just looking for growth; they are looking for capex discipline, clear guidance on interest trajectory, timeline clarity on margin expansion, power capacity milestones, and much more. So you can read more in the description box below. Okay, so as things stand right now, lower prices are expected to continue to print up till let's see what we have up till the midday today, the 27th. Then after that, we might see a consolidation. Okay, with a distributive bias up till Monday, the 9th of March. Okay, projections are currently saying beginning from the list 81.1, 84.36, 89.63, and 99.29, 101.81. Okay, this is its 4 hour chart. Let's see what we have on its daily chart. On the daily charts, okay, it's on the line trend is strongly bullish. The 200-day moving average, this one is sloping bullishly upwards. Okay, so let's see what we have. Is the stock consolidating? Okay, let's see. The stock is yes, actually the stock is an up is trending as a matter of fact. Even though with this plunge now, it's at 89.20. So the close of yesterday, the stock was still trending. Yeah. No, no, not it was. It's actually not trending. It's actually consolidating. It's actually consolidating. We don't have the right order here. You see, the 10-day moving average is in the medium term where it's the stock is trending within a medium term, but not within the longer term. See, in the medium term, based on the 40-day moving average, we have the right structure. The 10-day moving average is above the 21-day, and the 21 days above the 20-day, the 40 days. So we have the right structures within the intermediate and medium term. The stock is trending. This is as of the close of yesterday, but not including what has happened in the post market session. But we don't have it within a longer term. It does not. It's not. We don't have the proper structure. So as such, the stock is actually consolidating within a longer term bullish trend. Yes, and also trending within a longer term, a medium term bullish trend. Yes. Okay. So the projections we have here are saying 118.02, 134.84, 145.22. Okay. So let's see now. Our best bet, because the stock hasn't been around that long, our best bet is what we have here on the 4 hour chart. Expect a distributive consolidation, a distributive, a distributive contraction to play out all the way towards at least all the way out towards Monday the 9th of March. And here the projections are not just some projections are to the upside. We have 99.29, 101.81. Let's see. Yeah, and yeah, we have and also 89.63. Yeah, so it's from all indications, it may be more of a consolidation that we may continue to see, which is also prevailing on its daily chart. Okay, so thank you very much for watching this video.